Hello, everybody, and welcome to Market Moves. I'm Jason, the Wizard of Ops, and with me, as always, is Jay, aka Dark Matter. Jay, how'd you like our new graphic to open up the day?
I loved it. I thought I was in melody and just waking up to a peaceful heavenly morning that is Monday. So it excited me. I don't know about you.
Well, it gave me more time. I sat there, I could take a deep breath, so I like
Yeah.
that. But yeah, it was a weekend of lawn for I think both of us, right?
Yeah, this lawn work is never going to end. I feel like it's going to be the end of me. That's something takes Jay out. It's going to be my lawn.
All right, let's get started. First, let's go with your plan, and we'll interweave, and maybe at the end we'll have like a bull versus bear debate. So
Yeah, definitely. Let's
go ahead.
I'm excited for that.
Mhm.
Let's maybe just quickly do a quick recap of last week. So I think last week our big level was the 7,500 SPX level, which we gapped up on Memorial Day. We were closed. We gapped up above that. Then we held that level. I think, Wiz, correct me if I'm wrong. I think it was 3 or 4 attempts at breaking 7,500 SPX. And
Mhm.
while futures did break by about 10 points below that level, it was quickly bought up. And then, we trajected up towards 75.75 finally in the SPX at the end of last week on Friday there. So I'll just quickly pause. Just any thoughts on last week? Anything that surprised you? Any notes or comments you want to leave about last week?
Well, I think the big thing for last week was the vol crush. Like there was a massive vol drop for the whole week of 2 points that only resulted in give or take, like 80 points of rally. Um, Usually, that's a severe vol drop. I think part of that, and sometimes this happens, part of that is the monthly rebalancing. And then vol drops considerably. People, sell their calls or whatever. Um, and then like I'm looking at this morning, it's popping again. So I'm thinking that might be that might have been the cause. Um, I know we're popping again today, but we didn't really pop enough last week. So I think this would be kind of equivalent to a Monday effect this week. So I wouldn't, normally I say when you see vol up, futures up, expect a reversion, and that could still happen, but I would not be expecting it as much this time. So that was my main thought. I thought vol was gonna not drop below something like 16 and a half. I went long Vega, so I didn't do too well in the P&L department, um, but now it's going to pop back up. So it's, my vol, that's kind of how I'm trying to play this is through vol. Yeah, I mean, so we kind of dropped below like a certain kind of threshold last week in vol. And that's what surprised me the most.
Yeah. Okay. Great. All right. Let's jump into this week because we've got a lot, and I know we've got some really great content out for today. So let's jump in. So Powell did speak yesterday. So if you missed that, he spoke. But in terms of this week's calendar, it's fully loaded with jobs. So that's what I'd kind of take away from it is lots of jobs data this week. You've got various Fed speakers, but also Secretary Bessent is also speaking on Wednesday. So in general, Wednesday and then Friday are kind of your catalyst heavy days. I would just sprinkle in there for those of us who are, following the semis. On Wednesday, we have rather gnarly
Mhm.
earnings going on. AVGO, Broadcom is reporting. And then one of the software bunches, the cyber security trades, they've kind of caught on fire, right? So the two big players in that space, Palo Alto and CrowdStrike, they will both be reporting. And in general, for me, like even at the end of today, another semi, HPE, which is kind of getting some of that love of Dell and Lenovo and things of that nature from their computer standpoint. So I'll be watching HPE, but consumer discretionary stocks that I would also watch: Victoria's Secret, Ulta, obviously. Are women still buying their beauty products or not? That's always typically a good sign of how the economy can fare over a given period of time. And then last but not least, do people want their exotic Lululemon athletic wear? That's on my docket for this week from an earnings standpoint. Any?
All right. So it started kind of normal where you're like Broadcom, CrowdStrike, tech stuff, and then you want to see if girls are staying pretty.
Yes. Hey man, they drive part of the economy as well, right?
All right. Now I think Broadcom, I'll probably do an earnings report for Broadcom. I mean, I think we're going to talk a little bit about semis later when we talk about our bull bear thesis, but yeah, I think Macy's too, as in the same kind of lane as our women staying pretty. Ulta, my daughter, it's 6 years, 5-6 years old, loved Ulta when she went her one time, but
she's hooked. She's hooked now, man. You're done. Your wallet's done.
I know. There goes my wallet. She's gonna have to get a job. And then there's Victoria's Secret on the women's side too. So anyway, all right. So yeah, I kind of think Broadcom is a big one, but we'll talk about that later. So go ahead.
Yeah, Broadcom's the big one in my opinion, and then obviously CrowdStrike. I'm kind of looking at it. So in general for this week, just what I'm looking for here is I think we still have 7,500 as a magnet, as a floor below us that we need to kind of break through for a little bit of bearish activity. I think even intermediate, we even got a bounce near it, like 75.50, 75.80, this zone here. It's a 30-point zone, but I think it can find some buyers here until, you get some catalyst that breaks through it. But in general, I'm going to kind of stick to my thesis of what I said last week, Wiz. As long as that 7,500 level holds here, and if we can get that catalyst, whether it's the earnings, maybe the jobs data, I think we can still push up towards 76.50, but there's a lot of overhead as you get above 7,600. So it's not going to be simple. It's not going to be, a nice steady race up above 7,600. We even see here, in my opinion, even in futures action today, we popped up, I think, up to 76.10 even. Not even 76.15 here, and we found some resistance, right? So I think until you clear 76.15, that's kind of you're contained within that range for the time being. And furthermore, we've got our trade ideas. I'll kind of skip on those for just a second here. What I'm kind of looking from just the key levels, you can see there's a lot of gamma, Vanna, negative Vanna as you get above 7,600. So you do need a catalyst through this zone here if you're going to break up above 7,600. I'll pause. Thoughts on your end?
Yeah, I mean, I think it's a little bit more flat than anything, but again, the trend of weekly puts, maybe 1 to 2 weeks out being bought, continues, and it continued next week and this week have some puts bought. So I think there is significant support. I also think that 7,500 is a really good support for even into next week. This week, I think 7,550 is the big support. I think if we don't drop below 7,550, I mean, we might just hang around in this area, but I think above 7,550, I would be buying the dip, and on an intraday basis. And then below 7,550, I would expect to see 7,500 pretty quickly, and that will determine where things go next. So because if then 7,500's lost, we're probably gone. Like, we got to go. So that's kind of what I'm seeing as far as like a this week kind of plan.
Yeah, I would agree with that. And I think if we look at our, weekly Vanna here, exposure wise, we're in the positive. I think if you also start to take a look at our, gamma, the good thing here is we're in a cluster of some positive gamma, right? So moves won't accelerate as much, or sell-offs won't accelerate as much, right? So, but we do have between 75 and now 7,600. So you could bounce around until, resolution occurs at these levels is what I'll call it. And once you flip and hold that 7,600, I think now you're starting to, go up towards that upper level of 7,650 we discussed there. So any specific Greek you wanted to call out, or you want me to pull up here?
No, I mean, I think it's again, it's like it's all basically Vanna at this point.
Yeah.
And will June decline? Like what will happen with the June Vanna? And because there's so much negative, it's so many in the money calls.
Here you go.
Yeah, I think eventually, like all the JPMs and all the kind of same kind of things, same kind of portfolios where they're covering with calls on a quarterly basis, they're going to have to sell portions of their now way overpriced portfolio if it expires this way. Dealers have the money, like they're making money on these calls, right? They're long calls, so they are making money. And like when we're trying to time something like this, I mean, I'm trying to look. This is the part of the market that I could see pretty clearly, and I think if customers are, they're going to get exercised at the end of the June OPEX. They know it. They're going to have to raise cash because then the cash is going to have to go to the dealers who are holding their holding those calls, right? So if the cash has to go to them, then they're going to have to raise that cash somehow, which would be to sell stocks. So I've been saying like probably by June OPEX we'll see a major downturn. Could be just a little bit after if that's the scenario that plays out, which is probably the latest scenario that would play out in that way.
Yeah. Yeah, I mean it's an oddity this June OPEX, right? And that we continue to push up and up from it. It worries me a little bit that an action can come really quick and fast, right? That like you're not even prepared for, you're not ready for it. So I do think there's some hedging that should occur through this month, just to protect you to any downside if you are long, for example. But in general, it's a weird one. But I think maybe our next topic we'll get into here, Wiz, can explain where I do think we hold these levels. June OPEX then becomes this like reality check of, okay, what occurs here next at these ridiculous levels we might be traversing towards. But it's a little bit of an odd one for me. I'm not gonna lie. I've never seen an OPEX like this. Like it's been a while since I've seen so much negative Vanna, and yet us holding these levels week after week, right?
Yeah. Well, several years ago, I think it was like 3 years ago, we saw a lot of negative in the money Vanna, and it was around December, and because you had like that annual, but a lot of that was boxes, so it didn't have as much of an impact. But it did have an impact. Like as soon as the calendar turned past the December OPEX or the January OPEX, both of them had negative Vanna. Then we had a downturn. It wasn't like a sustained thing. It was definitely a buy the dip kind of thing. This one might be a similar kind of look. So.
All right. Let's just quickly look at 0DT here. I mean, even 0DTE, look at the chart, 75.80 to, 75.50. I think we already called those levels. And your big dog here all the way up at 76.50. We'll see if we get up that far. But intermediate, that 7600, 76.15, a couple of those key levels that we already talked about. And anything you want to call from a 0DTE standpoint, Wiz, for today's trading session?
I don't know. It looks kind of bullish to me. What are we at? 65.95 right now. Like futures equivalent. So it's like
75.95.
It looks like 7,600 is a pretty decent barrier here. But what is that? 70, those two huge strikes below it could actually push us a little bit higher into that 7,600. So, I think when this turns, it'll be pretty vicious, but like I don't, when you kind of look at it, when you look at it this way, you're like, I kind of almost look at it as pre-market. Every pre-market, is there a big red number? No. Okay, we'll probably push up a little bit. Is there a big red number? No, we'll probably push up a little bit. I just wait for that one morning where I wake up and I'm like, oh wow, pretty big red number.
Like, when we're like down 2%,
yeah.
you know what happened to your options or your trade.
Yeah. That
Like,
vol,
oh my
that
God.
vol problem is just like gone. You're like, whoa, there you go. Here's the vol.
That's right. That's right. That's why I sometimes got to hedge with those VIX options, right? All right. I think we got to get into questions here, but before we do, don't forget to like and subscribe, everyone. We appreciate you joining here every Mondays, or usually every week, Mondays, I should say. Last week we were on a Tuesday with the holidays, but thank you for joining the Market Moves show here with Wiz and I. I think we give some awesome analysis and what to expect on the ES and the SPX on a weekly basis here. So like and subscribe if you have not had a chance to yet.
All right. So do you want to take, like, we'll talk from a swing standpoint. Do you want to take the bullish or the bearish position?
I don't even know if I can like defend the bearish position at this point. I think I have like one reasoning for a bearish positioning in Thesis. So how do you tell me?
All right, then you take the bullish side. Lay out your case.
All right. I mean, so here's my big case, and I shared this. Let me just pull it up here. I shared this in last week's trade plan, right? And I'm going to focus around earnings for my bullish thesis here is the big reason. And to me, we got a shock, whether you looked at semis, memories, or even now CPUs, right? The original, let's call it phase one of the AI trade, I'll call it, right, was NVIDIA, the GPUs, right? Do we have those chips and so forth? I think now that we've gone past that now. Now it's about the CPUs, more of the data centers. How do we now get it going at the memory level? We got to store all this information, right? So I think coming out of earnings, especially over the past couple of weeks here, the trend has shown that, right? You've got, first of all, your DRAMs. They're just spiking. These are your Microns of the world, your SNDKs of the world, your SK Hynix, your Samsung, right? You've seen the parabolic moves in those stocks. And I'm going to come back to Micron and SNDK here in just a second. You then have, your CPU side of the semi, so more dispersion, call it, in the AI trade is what I'll call it, Wiz. You now have your Dells, your Lenovo's, even Chinese stock, right? And your Hewlett Packard. Since when did anyone get excited in Hewlett Packard stock again, Wiz? I know I haven't, but I am excited about it now. So I think there's that aspect of it, right? And as you're starting to see, and again, for our readers in the Discord, this entire commentary around, the first quarter earnings here is a lot of what I'll base on, but more specifically, Wiz, and let me just give me a second. Here we go. All right. Everyone's kind of talking about as they look at, and I got this from my buddy, and he's got like a Goldman Sachs kind of, subscription. So I'm borrowing two images that I just want to point home or hit home on what I'm looking at for here. Specifically, what you're looking at here are the black line is earnings and then normalized price, or think of it as the SPX here. So as earnings are going up, which is exactly what we got out of this last quarter, right? We have not caught up to the price or what the market is worth, let's say, based on those new earnings figures. And I think more specifically, when you start to pinpoint it down towards Micron, WDC, STX, Samsung, and SNDK, right? I want you to not focus on the purple and the green. They kind of show you the story of what's kind of already overvalued. But if you look at Micron here, just in the gray, right? Micron is actually cheaper at levels here today than it was back in October. So just think now, if you are looking at Micron, you're saying to yourself, wow, that stock ran from $380 to trading today at about $1,000 now. Is that stock still too expensive to buy? My opinion is it's not. The data shows it here based on its earnings, right? What it's worth and what its market cap can be. And so that's my one example. And my last but not least, I don't have a visual for you here, is just the IPOs that are about to come, Wiz. We've got SpaceX, we've got Anthropic, and I know everyone's like, oh my God, it's going to dump the minute that those two, go to IPO and then add ChatGPT. If there might be a liquidity grab at that point in time, I don't deny that. But there's going to be more value that's coming into the market. And you can, again, what will this look like as you add those other 3 new IPOs? All right, I'll pause.
Okay, well, if you're looking at the S1, that black line will shoot down when SpaceX.
True, fair. With SpaceX, fair. Now, what about Anthropic, though? What about Anthropic? So now I'm gonna give it to you now, Pat.
Yeah, no. So that is great for those stocks, but the S&P 500 is 500 stocks, and even these few stocks, which, granted, they maybe were undervalued. Forward PE is a predictive kind of measurement. So, and maybe those stocks will kind of hang on, right? They are dependent on quite a few inputs, right? They're dependent on TSMC, they're dependent on rare earths from China, they're dependent on, a variety of inputs that are now kind of being controlled by geopolitics, right? Especially the rare earths, right?
Yeah.
So personally, on an immediate kind of time frame, the whole Strait of Hormuz thing, which is impeding 20% of the world's oil, has been completely absorbed by China, right? In April, China saw a 20% reduction in oil imports, and they've been drawing down their very significant strategic oil reserves, which apparently is in these big underground tanks. Would really hate for somebody not to call Miss Utility if they're building over those. But anyway, so there's these reserves that China is holding a lot. Like I think it was 1.4 billion barrels of oil, and they were kind of ready for the situation. They're absorbing the impact, kind of saving oil from the largest of doomsday prognostications, right? So then here's a couple of questions. Number one, what is China doing with that money that they are saving on oil? Well, China is very big into the AI space. They're trying to catch up to America and even surpass American ingenuity in the AI area. And so what would they do in order to reduce the possible external dependencies? Well, they would buy it up, right? So I think like the Microns, the Broadcom, the any kind of DRAM stock, all these ones that would create inputs into AI are the ones that are rallying. Meanwhile, your hyperscalers, your Metas and Microsoft, or Tesla, all the ones that even NVIDIA, all the ones that would be profiting directly off of the AI trade is all of them are not running like Micron and whoever. Even though I would say NVIDIA is probably a better deal right now than Micron. So that's kind of what I see happening. So number one, when the Strait of Hormuz opens, China will start importing. They just drew down their oil reserves. You would think they're going to start importing their reserves again, which means that the big, kind of money flow that we've been seeing into these AI names, I think, would be reduced. No matter, that's number one. So that kind of runs into, I think, a peace plan would actually hurt the market as opposed to help it. And number two, let's say, I'm sure that Xi and all of his economists or whatever are saying, okay, this is a red line for us when we are, when we will start buying oil again in order to maintain our reserves. And we don't know what that line is, but I'm sure it's there. So even if the Strait of Hormuz continues to be closed, eventually there will be a point where China's like, okay, we're pulling our money back. We need to buy oil. And that, I think, would be a more severe drop. Could it happen after June OPEX? Maybe. Could they be waiting for like some excuse, like some bad print? I don't think so, because I think a lot of the prints are not going to be bad because of them. So that's kind of where I'm seeing it. Therefore, I think that this rally is propped up possibly by the Chinese. That's more speculation than the fact that the Chinese have reduced their oil imports by about 20%, and I think that eventually they're going to stop flowing their money into the equities and start flowing it, because like SK Hynix, that's in Korea. This isn't like an American story. And even Samsung's not even, you can't even trade that in America. So I think that there's a lot that there's got to be a huge pocket going into AI. All the other stocks have kind of languished. And I think that eventually there will come a time in which China will cry uncle. America's already, like, if you listen to the Chevron and Exxon CEOs, America's already getting ready to cry uncle, right? They're already there. And China, I think, is the last sovereignty to need to cry uncle with the Strait of Hormuz. And I don't know if Trump even recognizes that kind of dynamic. He's still kind of debating, and I don't know. Will I go into China? Will I sign this deal? Will I not? I mean, last Friday I thought it was as good as signed, right? It never happens that way. So I think that in a swing time frame, and your thesis to me is a lot longer term. I think there'll be a dip in between your thesis and mine that can eventually be bought. But it may cause a lot of pain going down until then.
Yeah, I would agree with that, Wiz.
Mm-hmm.
I think a dip is coming. I don't predict tops, as you know, or bottoms.
Yeah.
That is not my goal here as a trader. What I do, I would say though, you'll find, in my opinion, I think also, just to give a bearish thesis, right? And give me 1 second here. I was trying to find this one. I didn't want to go all over on camera here while we were presenting earlier, but there was another one of these images that I saw, charts. Let me see if I can find it.
I could have turned it off. Hold on. You want me to turn the thing down? I'll answer some questions while you look.
No, here, what kind of stood out to me is if you look at the margin debt, right? We have not seen some of the levels of margin debt until some of those past, call it, catastrophic events in our economy, excuse me, in our stock market, right? And looking at this, right, you see exactly that. Like, we are starting to get closer to those, call it the hefty side of excess margin debt. And I think if there's one thing I am looking at from a bearish standpoint, it's this chart here. And thank you, Sentiment Trader, for providing this. But the big one on this one for me, Wiz, is you start to get to these upper ends up here, and they end in tears, right? And this is something on a monthly basis. I keep an eye out on it, and it just keeps going. I mean, you could just see this thing. It just keeps going. At some point, it will not want to go. And I think that's when I am going to be extremely careful in the market, no doubt, as we get closer and closer to these extremes. But debt, I'm worried about, especially when you consider 2 or 3 massive new IPOs that are coming this summer.
That is my worry. That's past your bull thesis. Like, because I think sovereign debt is a huge deal. Margin debt is a big deal, but sovereign debt is going to be a huge one. If there is a recession, whether caused by oil or caused by whatever, we have no room to run. I think that Warsh might start that recession by decreasing the balance sheet. He's been chirping about that forever.
Yeah.
So I think that's going to be the catalyst as well. So anyway, let's get to questions too, because we got a bunch of people who were chiming in. So
we got a nice
I'll go
sell-off
in from
while
the top.
we were talking here too. We sold off like almost 20 points there. So yeah,
Oh, really?
let's go. Funny thing.
Yeah, there's Johannes noticing the sell-off. All right. Little Woj, who's ready for core 1 month? Oh, he's using the core 1 month. I bet Little Woj, you must be X's foo bar, aren't you? That sounds very foo-bar-ish. Let's see. Is it true that dealers hedge options that are in the money more aggressively? I think I think some of the metrics kind of favor that a little bit on in the money, but it's not. I wouldn't count on it significantly. It's not like they're super aggressive. It also depends on how, because right now those in the money calls for June OPEX are dealer long calls, and the market's going up. Are you going to hedge that aggressively? You're not going to be like, no, don't make me money. No, stop. So I think it depends. But if you're losing money on the put side, you're like, oh, hedge, right? So that's kind of, that seems like that's more or less what it is. It's not so much whether the option's in the money or not. It's, are they making money or losing money? So.
And just FYI, for those curious, that sell-off, it was Iran news. So Iran halts indirect talks with the U.S. over Lebanon and Gaza ceasefire violations. So there you go.
So there's always an Iranian thing. But you see, though, that kind of headline, now that I've seen some of the more, dynamics that I think behind this, that kind of headline, I think it puts off a larger scale sell-off rather than I think it puts it off a little bit rather than institutes it, unless if Iran stops talking and America now starts bombing stuff, and that would kind of say the Strait of Hormuz is not going to be opened anytime soon, and that would probably cause a mini sell-off, and we're still in a limbo period. I kind of want things to resolve, I think once that resolves, then we'll see a possible bearish, kind of sell-off kind of thing.
Like a sell the news, basically, vibes.
It'll seem like sell the news, I think. But if you think about it, when the Strait of Hormuz was closed, somebody bought the news, right? Because that's when markets went up. So
yeah.
All right. So C. Brian says, in an older market moves, Jason said the Vanna. Now, right now, once the direction is hedged, a put is a call is a put. Dealers don't care. The type doesn't matter. But it does matter when it comes to gamma. It kind of matters. Again, it's not so much gamma. It's more, are they making money or losing money? What matters more for gamma is the premium that is collected. Can you guys elaborate more on that? Thanks. Did it. All right.
I love it.
Accomplished. So with gamma, what matters more is how much premium is collected. So dealers, let's say everybody buys options. Dealers like that. I mean, they're people are buying option, bi-directionally, some puts, some calls, everybody's happy. And dealers are collecting in premium. They are now negative gamma. They're short puts and short calls. They're negative gamma across the board, right? That doesn't mean they're hedging every single minute. They just say, okay, I have this pile of cash that is now in my pocket. When my payouts from expiration start to exceed my pile of cash, then I'll start getting weird. I'll start getting concerned. But for now, they'll just let the two-way market play itself out, and they would be happy to collect that money. So
yeah,
I am not going to dox SE Brian. I guess he doxed himself already. So your name is Brian. I'm Jason. Nice to meet you, Brian. All right. LOL, can't even get a 1 to 2% pullback. We have to hold these levels. Nah. All right. I don't know. Little Woj is foo-bar, and that's it. But hey, you've been right so far, foo-bar. So there you go. Never under paradigm. Yeah, we're still talking about not selling off, and now we're getting good sell-off and futures dumping, and a giant ship flying the Panama flag explodes in Iraqi territorial waters. bullish.
I love this one. This cracked me up.
Yes. And then as a side note, my wife says that women always want to look pretty. That is an inelastic demand.
That's right. That tells you all about the economy, man. Once those stocks go down, you got trouble. There's a bigger problem here, Wiz. More than China oil, all right?
There you go. If women are ugly, demand out the window.
Yeah, man. It's demand, it's attitude. There's lots of problems going on in the world, all right?
All right. Well, it's about 9:20. Thank you, everybody. Like and subscribe, and may Volland help you in your future trading ventures.